morning, fellow tax practitioners, CPAs, enrolled agents, tax preparer, uh, and CTEC, everyone who is in the practice of tax services. This is Chris Neri. I've been practicing taxation here in the Bay Area since 1991. This is a series of discussions or informations that I'm planning to post at YouTube. And this is the first video that I'm preparing for 2020. This will cover tax reform changes for tax reform that was passed by Congress some 3 years ago. And the bill went into place on January 1, 2018, which means that it will affect the taxes of most taxpayers for 2019. What are the basic changes? The first one is that the taxes for 2018 brackets have changed in income ranges. The brackets before were 10%, 15%, 25, 28, 33, 35, and 39.6. In 2019, the brackets are 10, 12, 22, 24, 32, 35, and 37. As you can see, ladies and gentlemen, the changes and reductions of the taxes actually affect most of those who are in the middle income group. And I would touch exclusively on those basic changes that involve those that are earning 75,900 or less. It's now 12%. Those who are earning after 75,000 up to 153,000, it's 22%. And those who are earning up to 233,000 but less than 153,000 is 24%. This is for the joint filers. For the single filers, anyone that earns 91,900 is 22%, and anyone that earns more than 91,901 up to 191,650 is 24%. The bill eases the burden of the individual alternative minimum tax amount by raising the income exemption from 84,500 to 111,700. This means that those individuals who have an income of 111,700 doesn't have to worry about the AMT. And for the families also, it increased the standard deductions. The standard deductions for single taxpayer also has jumped from 6,350 to 12,200 for 2019. For married couples, the increase is from 12,700 to 24,400. It may seem that there is a huge amount of reduction in our tax payments if we calculate this on this basis. But what happened is that the deductions for exemptions have been eliminated. If there is any change on our taxes, it will be very minimal. And those will be impacted are those high earners, those that earn more than 416,700. Also, the bill also caps the amount of mortgage indebtedness now to new home purchase, which can be deducted at 750,000 down from 1 million. Simply, it means that if you buy a house now, 1 million, then there's going to be a cap. If you buy a house worth 750,000 mortgage, there is no cap. But there is what we call the also the changes on the cap of the uh, mortgage and also the state taxes. So and also another major significant change is the self-employed. The biggest includes a reduction in the corporate rate to 21%. Now, new deductions, 20% deduction for income from certain type of pass-through. Small business can expense from 2017 Section 179 of 510 to 1 million. It'll eliminate the corporate alternative minimum tax amount. So in recap, there is going to be some major changes insofar as the tax preparation for 2019 because of these changes. But this will be automatically captured by whatever software we're going to use, as long as this is a professional software for taxes. Um, the other thing that we need to look into is uh, the limits of the property, income, and mortgage interest. Uh, uh, the property sales taxes and state taxes is limited to 10,000, which include the property taxes. Let's put it this way. Simply, it means that you can only deduct the maximum of $10,000 of the total state tax and property taxes that you are paying, or including sales taxes for the year 2019. To put it in real perspective, assuming that you have a $5,000 real estate tax and a state tax of $5,000 deducted from your payroll. So you are not affected by this because your cap is 10,000. But if your mortgage interest, which is most of the cases, exceeds 10,000, assuming your mortgage now is 15,000, but your total mortgage amount that was grandfathered was 1 million or up to 750,000, you're still not covered by this cap. This cap is only covered if you purchase the house in 2019. So basically, there is no cap as long as your house were purchased prior to 2019 and the amount of the purchase was 1 million or less. So that's the rule of the thumb. Now, on my next video, my friends, my tax practitioner, I will touch in detail of what are the changes on the California tax bracket, as well as the California tax preparations. In the meantime, I wish all of you the best of the day. Enjoy your tax season, and I hope that you're going to be making a lot of money this tax season. And once again, this is Chris Neri signing off. Have a nice day. Bye-bye.